Hello and welcome back to Explain the Charts. Today, on July 13th, 2025, we're diving deep into the USDCAD pair, examining recent news and performing a thorough technical analysis of the charts to identify potential trading opportunities. First, let's address the latest headlines. According to recent news, the Canadian dollar rebounded after hitting a two-week low, fueled by unexpectedly positive domestic labor market data. Canada added 83,100 jobs in June, significantly surpassing expectations. However, the CAD's gains might be capped, as Trump is targeting Canada with a proposed 35% tariff starting August 1st, citing concerns over fentanyl and trade imbalances. These tariffs could weaken the CAD, potentially pushing USDCAD higher. Now, let's transition to the charts and see how these events are reflected in the price action. Looking at the daily chart, we can see a period of consolidation followed by a recent sharp drop on July 12th, likely influenced by the tariff news from the United States. The positive job data seems to have only provided a temporary bounce. Let's zoom into the 1-hour chart for a closer look at the recent price movements. We can observe a bit more detail about the decline, identifying some possible support and resistance levels. Around 1.365 to 1.366, we may find some support. Switching to the 15-minute chart, we can fine-tune our analysis even further. On this short-term time frame, we see a struggle near the 1.364 level, potentially acting as resistance. Currently, it's hovering around 1.364 right now. The market seems to be waiting for a confirmation of the 35% tariff imposition to take effect. Zooming out to look at the larger picture again, we see the price is at a lower level than it has been in some time, which may signal it to be a good time to go long. However, the threat of the tariff is very substantial and the price could continue to decline, even more rapidly, as the market sells off before the actual imposition. Recapping, key price levels to watch are around 1.365 to 1.366 as potential support, and 1.371 is a new resistance to look out for. If the tariff news intensifies and risk-off sentiment rises, a bearish scenario could drive USDCAD towards 1.355 or even lower. I'd say this has a 60% likelihood given the current political climate and Trump's tendencies. Conversely, if trade tensions ease and the Canadian economy shows continued strength, a bullish reversal is possible, potentially targeting 1.374 and higher. This is probably only at a 40% likelihood considering the political and tariff imposition probabilities. Keep an eye on news related to trade negotiations between the US and Canada. The Bank of Canada's upcoming policy decisions and statements will also provide crucial insights. Remember, this is just an analysis, not financial advice. Thanks for watching Explain the Charts.